Hello, hope everyone is doing well. In today's video, I'm going to be going over some analysis for Bitcoin and also Dogecoin towards the end of the video. But my main focus for this video is because I'm not a channel that's geared towards really trying to give financial advice. I'm not trying to tell people what to do with their money, nor do I want to tell people what to do with their money, an emphasis on their money. But my channel, my goal of this channel, my Twitter account, and just my online presence for this crypto stuff is to just inform people, educate people on the fundamentals, just the understanding of the market, why price moves the way it does, why it looks the way it does, the indicators, all that fun jazz. Just an educational basis. That is my viewpoint, is trying to educate people and give to them understanding and knowledge about what they're looking into, instead of trying to tell them what they should be doing with their money so they can do it on their own. But outside of that, what I want to go over here is, because my main discipline has been studying physics, I understand price as position, I understand RSI as velocity, and I understand the stock RSI as the acceleration. I look at them as velocity being a derivative of price, and then acceleration being a form of second order derivative. RSI gives you a little bit like under like hidden information on the price, like its motivation, its momentum towards a direction. Obviously the velocity of the price, which is going to be a vector in terms of sciences, so that's going to have a speed, so like 50 miles per hour, and also a direction. In this case it would be up or down. And then for the stock RSI, or acceleration, given that it's more of a second order derivative, it gives you, you can use it with direct comparison to the price or the position. Like for example, I could just be using, and I will be later on in this video, just be using price and a stock RSI. But the stock RSI is very helpful if you're using RSI, because the stock RSI, as the RSI gives a little bit more like hidden information, under the hood information of price and what it's doing, the stock RSI does that for the RSI, given it's kind of like a second order derivative of price, or technically it would be more kind of velocity in this situation. But hopefully I understand what I'm getting at with that. But outside of that, I initially just want to point out all these lines that I have on here, and then I'm going to go over this little analogy that I have. So you can see we had our break right here. We came down, made this little W looking formation, broke out, and then we just slowly trended upwards for price. But if you take a look at the RSI and the stock RSI, you can see how those trended down. Bearish divergence we got right there, and then we obviously hit this point, started slowly trading into this green symmetrical triangle. Look at this yellow line, you see the price was going in a negative slope, but the RSI and the stock RSI bottomed out, they flattened out, which right there would be indicating that the price is about to shift direction. So far from that point it did. It entered the symmetrical triangle, and price is slowly, kind of like this black curve right here from a bottom point, just slowly, ever so slightly curving, and I assume probably going to break towards the upside. But outside of that, again, we go to our red line, first bottom in the symmetrical triangle. Right here you can see price had a negative slope, RSI and the stock RSI had a positive, so right there would be hidden bullish divergence. Then we go to this purple line, price was upwards, RSI, stock RSI downwards. Right there would be another bullish divergence. And then we go to these three yellow lines right here. We had our final bounce in this first symmetrical triangle, the green one, with a bullish divergence, and then we broke out of it, and similar to this first divergence that I went over, we had a bearish divergence right here, came back down, touched the resistance line, just went a tad bit lower right here to form another bullish divergence, and then this has led into another symmetrical formation outside of this first one that we have. So there's a lot of symmetrical formations going on here on these lower time frames right now for Bitcoin, which in my opinion is a very good thing, because I think it's going to be breaking towards the upside, as I already believe the bottom has been set. But at the end of the day, it could break towards the downside. We're just going to have to figure out about that. But the point is, obviously you can see up here pretty clearly, price is making some symmetrical formation. Velocity, or the RSI, is also kind of doing the same thing. Kind of, you can see how we were lowest right here, highest right here, and we're slowly tightening in towards the center. So I kind of see that right there is similar to this. And then same thing for, not necessarily the same thing for this, but the idea that I'm getting on across here is you can see how price is kind of in a neutral. It's obviously it's in a symmetrical formation, so it's kind of neutral. It can break towards the upside or the downside. Given that we are technically still in a downtrend, A lot of people are thinking that the odds are that it's going to break towards the downside, but I feel like it's pretty obvious, even though I have been entertaining the fact that we could go as low as 12,000 for the last few months, just because as a trader you need to be prepared for every situation, even if you think it's going to go to the upside, so that's why I'm doing that. But most people think it's going to go down, which a lot of the times when what the majority thinks doesn't actually end up happening, so maybe that will continue to be a pattern we see here. But the point is, as you can see, the RSI is not necessarily giving us too much. It's still looking kind of symmetrical like price is, but then you take a look down here at the stock RSI. You can see how we've just kind of been from the bottom slowly building up. Price and RSI are kind of neutraling out. No, it's not a word, but they're neutralizing pretty much. So what I'm kind of seeing is that this acceleration right here is just bumping the midway point, and it's really wanting to break towards the upside, which would then lead into a bullish break of the second symmetrical triangle. So that's personally how I'm seeing it right now. Right now we are testing. We've already gone a little bit lower than our lower support line, so maybe we're actually going to break down from here. Perhaps this could be a fake out, and then we actually break towards the upside. But if we do break down from here, we probably come down to this yellow dotted line around 18,000. Perhaps found some support right here if we are still going to go to the upside, or perhaps this breakout, if we do break down, is the solidifying action for Bitcoin to go down to 16 to 14,000, or even as low as to 12 to 10,000. But with respect to this drawing on here, so this analogy, what you see on here are these rocket emojis. Think of them as cars. So just imagine you're in a car driving down the road. You're going up a mountain or a hill, you reach the top, you're going down. Just keep repeating that over and over again. The point of this is that when you're in your car, obviously at your bottom, let's say you're completely still, everything is 0, and then you start pushing on your gas, that's going to accelerate. You're going to accelerate, that's going to then bring up your speed, your velocity. Let's say you're going east, so right there we have vector movement towards a direction with speed, quantification of that, whatnot. And then we start to dip back down again. I reach a bottom right here, which is correlating with the RSI getting oversold and the stock RSI doing the same as well. This is correlating to pretty much being at the bottom of the hill. You've already at this point let your foot off the gas, unless you're crazy. For the most part, especially if you want to be safe, you're not putting your foot on the gas pedal going down a hill because you don't want to be going too fast. So from this point, at this peak, you just let gravity and its natural acceleration bring you down. You built up momentum for that, and then you push on your gas once more along with that built up momentum. So now you're zooming back up this hill. We reach towards this top, we see our bearish divergence, we start cooling down again because we overheated our acceleration. We're just coming down some more. Start reaching the bottom, you can see parallel with this RSI, the stock RSI, and we start to even out a little bit. Obviously we've gotten our flattening out of the indicators, and then we had a negative for the price, indicating that we're starting to reverse a little bit, which is what we've done so far. So that's pretty much the gist of this position, velocity and acceleration analogy, and just how I understand it. I feel like it's probably one of the easiest, if not the easiest. I feel like physical analogies are the best way to understand it because it's something that everybody can visualize in their head, and it doesn't and it's a lot easier for me to explain it this way than to just literally go over the technical jargon-based explanations of all this. So hopefully I did a good job of explaining that to anybody who's watching this that is new and doesn't really understand it that much. For the second chart, we're here on the 2 hour, pretty much exactly looking at the same thing. Right here we are getting a pink vector towards the end of this consolidation. So right there is just signifying that something's about to happen. It's either about to break down, it's about to break up. Again, we could break down into a fake out, which is ultimately going to break towards the upside, or if we do break down, we'll end up going lower, probably setting newer lows. As I said, 16 to 14,000 or 12 to 10,000 are the two areas to be looking out for if we break down any lower. But here on this 2 hour, the main thing I do want to point out here is just a minor thing. So you can see for the last bottom on this green symmetrical triangle right here, and then for this first bottom, we came down, approximately tested this resistance right here, pretty much made this bottom right here in this new symmetrical triangle. Slope of this was negative, but if you take a look at the stock RSI, this is positive. And again, how the price, and technically here on the 2 hour, all three of them right here are making symmetrical formations. You can see this is pretty symmetrical on the stock RSI, same thing for the RSI, and obviously up here for the price as well. Again, general idea how you see we're coming down towards the bottom. We started to reverse a little bit. You can kind of see price rounding out a little bit, perhaps leaning towards the upside. You come down here and you look at the stock RSI. You can see how we're in this underwater position. And what I mean by that is you can think about another analogy. A good analogy is for the stock RSI. You can also look at the RSI this way too, but mainly for the stock RSI because it's got a specific boundary from 0 to 100. And what I mean by that is for the RSI here, you can see this low. You go to this next low right here, it was lower, so it doesn't have a strict boundary that it has to stay in like the RSI. But the point is we got drug underwater, like kind of like a beach ball or anything with buoyancy is drug underwater. When you bring something like that underwater and you let it go, it shoots out of the water due to density and things like that. But the point is as you're seeing price like this slowly, slightly, just kind of like curve towards the upside, you're seeing the stock RSI gaining ground from being really drug underwater, and it's slowly kind of pulling itself, and now we're forming symmetrical patterns pretty much in the neutral ranges of both of these indicators right there. To me, that's showing more of a bias towards breaking towards the upside and to the downside, but at the end of the day, that's just my specific bias and how I'm seeing it, and it could break towards the downside. But that's just personally how I'm seeing it right there. Here for this 12-hour. So the main thing here is that we are getting a pretty much two W's or double bottoms right here. So you can, first one you can look at it from around 32, 17.5, 25,000, then right here down around 18,000. You can see that as a W. You can also see right here is 25 to 18.6, and then to the second bottom right here is a W. And also if you come down here and take a look at the stock RSI, you can see how this slip is positive towards the upside, but this one's a negative towards the downside. So right there, we're seeing a bullish divergence. So that's good to see. And again, the same idea here goes for the stock RSI as I previously explained it on the 2-hour. You can see right here we started getting a bearish divergence very early on into this bull run. Got drunk underwater, bottomed out a little bit. We started slowly building back up through this water, finally broke threshold into the air, had a blow off top right here, got dragged back underwater, and ever since then, breaking down from 69,000, we've been stuck underwater pretty much. And now once more, as we did back here, we were trying to build up, but this was a false attempt to break out, got dragged back underwater once more. And then we entered another double bottom right here, similar to how we did back here. Again, we've built ourselves all the way back up to this neutral or this midpoint. I think this time around we will break towards the upside because we are nearly 80 to 83% down from all-time highs. We are 74% down from the all-time highs, and I'll actually touch on what this means a little bit later on in a later chart. But again, we're having a bullish divergence right here, which is very good here on the 12-hour. Again, we are in the red zone. If we do end up breaking down to the downside, like I said, we could come down here as low as to 12 to 10,000, or we could get stopped right here at around 14, 16,000. And this is just with respect to the slope that we've had ever since we entered this second W right here. We're either going to, if we break towards the downside, we're either going to get a very quick and rapid dump, like nearly straight down, or we'll kind of slowly straddle this slope line right here towards wherever we're going to end up bottoming out for this next bottom. But if we do break towards the upside, I do think it will be something similar to this squiggle that we're right here. I think we'll get a bearish divergence very early on, similar to how we did back here, because we are still within the same phase of Bitcoin's overall macro cycle, so I'm expecting something similar to happen. Here on the 2-day, you'll get to see in a later chart that all these bear markets are pretty much, when you look at the indicators, broken down into a macro 5-wave bearish impulse to the downside. Again, we see our W's right here. On the 2-day, we're getting another bullish divergence. Something important to look at here on the stock RSI is you can see we came down right here. We fizzled out on the bottom as we went sideways for this bear market of 2018, and finally had our final dump. Once that happened, we started to finally get liftoff right here. That's also what is happening right here. And again, I think this will transition into a W. I think we'll slowly just start to move towards the upside to see that. Outside of that, I think that's mostly all that I want to go over for this chart. It's going to be broken down a little bit more here in this one. That was just a zoomed in just to give you a little bit more of a perspective on what it looks like in terms of the price. But here again you see our one we've already went over. We have our second one right here for the 2018 bear market. We have this first one right here for the 14, pretty much the 13 to 14 bear market. You can see each of these pretty much did itself in a 5-wave move to the downside. You can see we hit our bottom. We made a W right here, lifted off, slowly straddled our way towards the top. For this one right here, this one was a double bottom, as I said. This one right here just came down and hit it once. This one also right here is going to be another double bottom, I believe. We've already seen a liftoff right here, so I believe, and like for example, this may be a false liftoff. Maybe we're going to come back down and touch this one more time, which would fall in line with us going down to 16 or 14 or 12 to 10,000. But assuming we have hit our bottom, we're breaking out right now. Bull market's pretty much starting. I believe that we'll see an RSI movement similar to this. I believe we won't go all the way up towards the top. I believe that we will end up printing a bearish divergence with respect to the 64,000 to the upcoming all-time high. Price will have a positive upper positive slope, and then the RSI will have a negative upper slope. Outside of that, here for this chart, which this chart pretty much puts everything into perspective. I've already went over breaking down the derivative indicators, so the RSI and the stock RSI as best and as most simply as I feel they can be put. But when it comes to position, so pretty much what I've gone over so far is I've pretty much broken down the RSI and the velocity and the acceleration pretty good. I haven't really touched on position and its fundamentals of movement yet, which that gets broken down into these M and the W patterns. This is an age-old thing that's pretty not new to the markets. Most people, especially if they're informed on trading, just the markets in general, know that the M and the W pattern are very fundamental to market movement. If you just begin to start seeing price movement as fundamentally an alternation between an M and W pattern. So for example, if you see an M pattern, it's leading into a W pattern, and that W pattern is going to lead into an M pattern, and that is pretty much seen right here. You can see we see first M right here. This M is going to lead into this W. You can think about as these two lines right here just being the same line. So you could think about the W as being from this point of the M down to this bottom, then we W out right here. I've already gone over this in the past. I have like a 45-minute video going over this, but you can see how we form an M right here. Let's say, boom, right here was our bottom. And then typically the double bottom is a fantastic reversal pattern, so you do something like this. And so you have price movement, something like that, pretty much all the time, especially for Bitcoin. It's pretty easily broken down in M and Ws. And I've got a very good Twitter post about this. I haven't mentioned that yet. My Twitter is in the description of my video and every single one of my videos. If you're not aware of that yet, I recommend going and check that out. I post there in between videos. Haven't been able to post as many videos in recent times as I was like to, so I've been doing that. But outside of that, again, for this M pattern projection for Bitcoin specifically, this one is around 2 times the height of this M pattern. I also have another very interesting Twitter post on this as well, going over Ethereum, SPX, and also the DXY, and pointing out M patterns and how, like for example, I think it was the DXY. That one was like 2 to 2.36 times its M pattern. So it's not always 2 times the height of the M pattern or 2 times the height of the W pattern if something's going to break towards the downside. And also, fundamentally, with respect to this context, the M patterns are bullish patterns and the W's are bearish patterns. And by that I mean M's are going to be what leads you into your bottoms, and then it's going to form a W, which is going to lead you into your high. So that's why I say the W is bearish, because the endpoint of a W is a high, so it would be bearish, and then the endpoint of an M is a low, so that's why I call it bullish, because I'm buying M's and I'm selling W's. But that's pretty much mostly what I want to go over for my explanation for the fundamentals. This is pretty much just a quicker video with respect to the other video that I made that's like 45 minutes long. I recommend going and watching that one if you want a little bit more of an in-depth, just a longer explanation of that. In that video I didn't really go over the RSIs and the indicators. I really just focused on price fundamentals and how it moves. But I do feel like the explanation that I went over for the indicators in this video is about as brief and simple as I could get it. So for this last chart on Bitcoin, this is pretty much just a very simplified way to show my overall theorem for Bitcoin. As I've already said, I believe we bottomed out, although I do and am entertaining the fact that we may have one more washout towards the downside as low as 12 to 10,000. But assuming this bottom right here, I believe will break out towards approximately 242,000. In general, my watch range is around 150 to 300,000, just to be prepared for the fact that maybe it's not going to go as high as I think it might. Then after that, we enter our next phase, which is just going to pretty much be another iteration of this movement back here that we saw from 2014 to 2018. It's just going to be lengthened, and it's also not going to be as bullish because that's just being factored in with Bitcoin's logarithmic decay over time. And then it also goes into, I didn't really point it out, but into this, I've gone over this a lot in the past. We have phase 1, phase 2. Phase 1 is our W into a lightning bolt pattern, which is what we're experiencing right here once more. This is why this is lengthened, because of what I already said about the logarithmic decay. And then right here would be phase 2, which is what we would be going into after we make this upcoming all-time high, assuming this is actually an accurate way to look at Bitcoin. And that takes us all the way up to approximately 1.382 million towards the end of this decade, around 2030 to 2032. So I'm not sure exactly when that will happen, because we are 8 to 10 years away from it. And maybe all this is very wrong. Who knows? But again, I just want to point out, we're here on the weekly. You can see, look at this RSI, is we're at historical lows pretty much. Not historical with respect to this one. We went lower back here for 2018. But I mean, we're pretty much, with respect to the RSI, we're at the levels where you've wanted to buy literally every time in Bitcoin history. So buying right now, even if we still have one more downside to see, is not a bad idea. Especially when this downside at most is only going to be like 30 to 40%. And in terms of the whole macro move from 69,000 down all the way down to the bottom, if you're still waiting on this final washout to 12,000, you're literally waiting on a whole 9%. You're scared to buy because of a whole 9%. From here to 12,000, so from around 19,000 to 12,000, as I said, it's not 30,000, but it's 30%. But ultimately, like, if you're not buying right now, you're waiting on in total 9% drop. I don't think that's something worth to be waiting on the sidelines for, especially when Bitcoin is showing just about every single sign in the book that it's bottomed out. If you come down here and take a look at the stock RSI, it further validates the RSI. You can see we bottomed out 3 times. We came down, we had our 5-way impulse. We formed an M right here, you can see on the stock RSI. So in my opinion, we're going to W out right here. We've already seen liftoff for the stock RSI. So we're going to start slowly moving our way towards the upside, in my opinion. Take a look down here at this MACD. You can see how we've slowly been building up along with this MACD. This is also kind of symmetrical in a way. You can see how it's kind of converging along this center point right here, along this white line just about. So it's kind of like a coil from a wider position. It's been converging and tightening up towards the center, towards an apex point. It's building up pressure to be released right here. And given the state of the market, the RSI, the stock RSI, where price is currently at with respect to the M patterns, the W's and whatnot, everything to me, and I feel like to anybody who isn't irrationally bearish, is pretty clearly showing that this is bottomed out and is more likely to be reversing towards the upside than to see a final washout. But who knows? Maybe it's going to see one more final washout and I'll end up eating my words, which is why I'm entertaining it. But outside of that, in general, I think Bitcoin's looking good. Here for Dogecoin, it's essentially the same idea. I'm not really going to delve on it too much in this video, but if you actually were to go and look at all the altcoins and then compare them to Bitcoin, you'll find that altcoins are pretty much just following the exact same structural movement as Bitcoin. You'll find out that the bull market's pretty much started at the same time for altcoins compared to Bitcoin, especially with Ethereum to compare to Bitcoin. But outside of that, here for Dogecoin, I have this channel that I created right here just to point out specific important confluences or correlations between previous price points compared to right now. So for example, what I mean by that is you can see with this middle pink line right here, you see this runs straight through this important consolidation we saw right here at 5 cents before we went up to 75 cents. Carry that line out, line it up nicely with this support we saw right here right before this final dump. Also lines up nicely with this high right here. Also lines up nicely with acting as support back here when Dogecoin pretty much first came out. And all of these other trend lines are just clones of this trend line, and I just moved them higher to stand out on other important points. Like for example, right here, that lined up with this other high right here. But for the structure of Dogecoin, you can see how it's pretty simple. We just have pretty much a sideways, just about sideways consolidation with some minor downside. I guess it's not really minor. I guess I shouldn't be using the word minor. But then we're led into an ABCD correction right here. Again, we see that same kind of like sideways movement, just about. Then we're led into another ABCD move. This is looking very fractal-like. The nature of fractals, just as I've already said earlier on in this video, my main discipline is physics. I'm a polymath. I'm also well versed in a lot of other realms of scientific research, but physics, fundamental physics, mathematical physics is my main thing. So that brings in what I'm talking about in terms of the fractality. Nature is essentially just a fractal, which ties into why the markets show heavy fractal-like structures, because the market at the end of the day is just it's a product of basically human psychology, in a simple way to put it, and pretty much what guides price movement, I believe, is psychology. I don't have it pulled up in this video, but another cool thing is, if you actually were to go and look at the gold chart and then compare it to Bitcoin, you'll actually see that gold has moved exactly like Bitcoin's first phase does. You'll see a bottom, kind of like a W on gold, and then you'll see like a lightning bolt move towards the upside, and that's pretty much Bitcoin's first phase. And that's why we call Bitcoin digital gold. I mean, if you haven't actually done that yet and compared the structure of Bitcoin's price to gold's price, I recommend doing that because it's kind of startling. But I got off on a tangent there. The price projection for Bitcoin, or for Dogecoin, is up towards approximately $25. Just in general, or anywhere from around $20 to $30. It should fall within that range, I believe. A lot of people have a problem with this. This still does not, given that this is going to happen around the same time Bitcoin's reaching whatever its all-time high is going to be. I believe it'll be around 242,000. This is going to line up around that same time. So Bitcoin's market value is going to be like, I think it's like 4 to 5 trillion, and then Dogecoin's will be like 3.5 trillion at this price. So that's not a problem there. It's still a very high market value for something that's technically a meme, but memes are a lot more powerful than most people think. They're very heavily important in psychology in terms of like psychological archetypes. If you're familiar with how Richard Dawkins has ever talked about memes, and that's kind of what I'm getting at. But the point here is, again, you can see how we're getting liftoff. We got liftoff back here for the intermediary of this first ABCD pattern. We're seeing liftoff right here as well, similar to how we saw liftoff for Bitcoin on the Stoch RSI. And this is, again, these are liftoffs that we're seeing after a long time of just straddling. Obviously, we saw liftoff right here, and that was a fake one. But given that this is also forming a very nice double bottom, along with Bitcoin, also along this trend line right here, it's also nice to see as well. I do also believe this will form a bearish divergence as well, so I don't think the Stoch RSI will come up here. I think it'll end up coming a little bit lower than these previous ones. And then after we make this all-time high, Dogecoin will also just enter a similar bear market, similar to these previous two right here. It'll be painfully sideways for the next 3 to 4 years. That will end up bottoming out around the same time I have Bitcoin bottoming out for the next one, so around 2025 to 2027. This bear market for Bitcoin will actually be more similar to Dogecoin's bear markets this time around instead of the previous one that we had for the W. That was mainly all that I wanted to go over for Dogecoin. This is going to be one of the top movers in the cryptocurrency market. It was one of the top movers the last time. I mean, it moved from the previous bottom last time towards its all-time high. It was around like 56,000%, just about on the dot. The second one will be around that same movement as well, just around 50,000%, and that is definitely the highest, one of the highest ones I've seen, as I've said in the past. Phantom moved the highest at around 200,000%, and then like things like Dogecoin or XYO moved around like 30 to 50,000%. That's like the high range that I would consider, and then like the lower range is like 8 to 10,000%. But again, that was mostly all that I wanted to go over in this video. Just as a final synopsis, I think everything's looking pretty good in terms of my personal opinion of the market. Again, either from this symmetrical triangle, we're going to end up breaking down towards new lows as low as 12 to 10,000, perhaps finding support around 16 to 14,000, or we will ultimately break up from this to begin the next bull market, or we will just continue trading sideways as we have been. But hopefully you guys enjoyed. Hopefully I did a good job of explaining these things, and hopefully some of you learned something new, and I hope you all have a blessed day.